Hello all and welcome back. I hope you're all doing really well. Let's jump straight into this one by looking at the state of the markets again, as we've done so in the past few videos. One of the first things I wanted to look at was another tweet by Blockworks, and it's a quote or comment from Kevin O'Leary saying that US policymakers are working on a policy to open crypto markets to institutional investors. This links up very nicely with what I posted to you yesterday, which was also another tweet from Blockworks, and talks about the $25 trillion of assets under management by some of the largest investment banks in the US, and how they are looking to enable crypto-backed ETFs. This would in turn allow a large percentage of that free cash or liquidity effectively to enter the crypto markets, which would see an increase in the general market cap of the crypto market. Talking about this in general, if US policymakers are working on a policy to open up these crypto markets to institutional investors, that opens up the conduit or the pipeline from those investment firms to move or freely move those assets and create the ETFs that they were so talking about. Not only that as well, we can see a tweet 21 hours ago from Blockworks that 1.3 billion was invested in crypto companies and funds this week. And there's the source. So we can see in general that these markets are moving towards larger crypto adoption, and there is this appetite, there's this demand from institutions to get involved in the crypto space. They understand that it's the future, especially as a lot of the big US tech companies which drive a lot of innovation are looking to onboard with blockchains and other technology such as distributed ledgers. With big companies like that moving into the space, a lot of the institutions will follow suit as they follow those companies. So again, more bullish news in general for the crypto markets, and it's something that we'll continue to see playing out over the coming months, I reckon, especially if this legislation does get passed by the US government. This effectively opens the floodgates for this institutional money. Not to mention as well, when we talk about institutional money, a lot of it is people like me and you guys that have pensions, for example. So if you work at a company, you've probably got a workplace pension that sits with these investment companies and it's invested through diversified funds. So that's where a lot of this money sits as well. So it really is adoption on a mass scale. It's not just the mega wealthy, it is the money of millions, if not billions of people that will be invested into the crypto space if this goes ahead. So seriously good stuff on the horizon by the looks of it. As well today, if you guys follow me over on Twitter, you'll see that I've just posted another infographic. So this one is looking at the development funds. Development funds are pools of financial capital to support ecosystem growth. The Hbar Foundation has a development fund that is 2,790% larger than the average shown on this list. Listed in descending order, we have Hbar at 5 billion, Algorand at $300 million, Phantom at $220 million, AVAX at $180 million, Ethereum 160, Solana 150, and then we have Polygon and Cardano at $100 million for their development funds. Also followed up the tweet by saying, for perspective, the Hedera development fund is actually 20% of the total Hedera hashgraph or Hbar supply and is delivered through the independent body called the Hbar Foundation. This is how serious Hbar is about bringing enterprise scale utility to the network above all else. And if you guys checked out the video I did with Connor at Hedera Starter, you'll know that those guys are applying to the Hedera Foundation for a grant as well. So that's how this system effectively works. These new projects and utility applications like DEXs and other sort of tools built on top of the Hedera ecosystem, what they do is they apply to the Hbar Foundation. The Hbar Foundation ratifies the project that they're looking to pursue. If the Hbar Foundation is happy with it and think it will continue to grow the ecosystem and is a good fit and partnership, the Hbar Foundation will issue a grant. So basically a cash injection to the project to help that use case or ecosystem to onboard and develop throughout its life cycle. So that is just how key development is to the Hbar or Hedera's cause effectively. So if you guys like these types of infographics, please drop me a follow over on Twitter because that's where I primarily post them. I have been also dropping them within the community tab over on this YouTube channel if you guys want to check them out. Flicking over as well, we see another tweet from Blockworks, which was posted yesterday, talking about Microsoft's new job posting. And I've mentioned in previous videos before, again, you can check it out on the channel, but they have big crypto ambitions, just like the rest of the tech companies over in the United States. We are seeing experienced engineers. We are seeking experienced engineers to join our team nationwide to build the next generation of crypto forward products. You will help build the next generation of systems to make cryptocurrency accessible to everyone across the globe. Now, Microsoft, again, is a big use case. You think they've got their full Office suite and integrations. That is used by probably somewhere around 80 to 90% of businesses worldwide. On top of this as well, the other two key players in the space, one of them that I genuinely believe is the Fortune 10 partner, is obviously Alphabet, and they have their BigQuery systems, which are a competitor to Redshift. And then the last one is obviously Amazon. We haven't heard too much information about Amazon regarding Hedera, but they are kind of the third competitor in this cloud computing space. It's Microsoft, Google, and Amazon AWS. So what we could potentially see is that two of the three largest cloud computing companies in the world are working with Hedera or have some intention of using Hashgraph. Really bullish cases in general for Hedera here that we see. Flicking over again, I wanted to touch on a Reddit thread posted on the Hedera subreddit. Really interesting sort of breadcrumb trail that's been pulled together by Rich Transition. It's something that I've mentioned before, I think, in one of my earlier videos. However, it cites the 5,000 TPS use case that has been mentioned a number of times. And it all links back to the energy sector and potentially it being EDF. Now, if you guys are aware, which again I've covered in previous videos, but EDF is a member of the Governing Council. It's one of the top 5 utility companies within Europe, and it might be one of the top 5 within the world. They are a French company which operates across the world. If you guys are from the United Kingdom as well, you'll know EDF is quite a big energy provider here. What we see is them talking about the in this thread, we see EDF talking about data insecurity and privacy intrusion have been the primary criticisms of these meters from both consumers and regulatory bodies since their introduction. Obviously, smart meters effectively and maintaining control over their data is a cited key concern of clients. A public ledger might be useful in resolving this issue, as it would provide an immutable ledger of exactly which data has been collected and transmitted, e.g. it's encrypted and doesn't connect the information to the user directly. Really similar to what I spoke about in my previous video regarding Google and how they could implement it with BigQuery in terms of obfuscating key data within source tables to prevent a data leak between companies or of clients' information. What we see here as well is after 1 year after receiving this warning from the watchdog agency regarding their data privacy practices, EDF then became a member of the Hedera Governing Council. Quite a crucial nugget of information there. EDF is the world's largest producer of electricity. Hedera developer advocate Justin Atwell also hinted the use case being the opposite of Dovu and emissions related. This would seem to line up with what EDF is. EDF produces the electricity effectively for the world's power grids. Naturally, that is not carbon efficient or carbon neutral or negative in any way whatsoever. Obviously, that produces a ton of greenhouse gases and adds to the globe's carbon footprint. Obviously, Dovu being carbon neutral / negative in some instances. So how does this all wrap up into high TPS? Well, if there are 35 million EDF Enedis Linky meters installed in France, customers will have the option of having their energy consumption data sent to EDF every 30 minutes, which is roughly 48 times a day. It's likely there are incentives to sending the data more often, albeit at a perceived loss of privacy. So some of you guys have smart meters, you'll obviously know and be full aware that you basically have real-time updates of how much your energy consumption is. This is something that we could see internalized over on the Hashgraph chain. Anyway, some customers will send once a day, others will opt for every 30 minutes. Let's assume on average, each meter sends its data 12 times a day. 35 million meters multiplied by the 12 data transmissions per day, 420 million transactions per day. Divide that by the number of seconds in a day and you get a number that spits out just under 4,700 transactions per second. I think this holds a lot of salt and gravitas. particularly considering, as we've mentioned previously, that EDF is a governing council member, and a lot of these governing council members do appear to be working very closely with Hedera and fully understand the tech and are able or are willing to leverage the benefits that Hashgraph provides. Even if it's not EDF's linking meter specifically, it could be related to a similar project EDF has been working on with the UCL, which is another governing council member. So Brixton Energy Solar One is supporting the community project in which Repowering London is a partner alongside EDF Energy and the UCL Energy Institute. Community is a local energy market innovation trial based at Elmore House on Loughborough Estate, where Brixton Energy Solar One has assets involved in the project. The local energy market makes use of a peer-to-peer platform provided by EDF Energy, enabled by blockchain technology, where residents of Elmore House who have joined the scheme can buy, sell and share the solar energy produced right above their heads. So they could effectively use Hashgraph to sell this energy. And I'm going to be looking at another use case in just a second to do with micro energy transactions as well, which is really interesting and kind of links back to this and reinforces this point. There's also this study regarding the availability of decentralized electricity exchanges using blockchains. One of the authors is a guy from EDF that represents them on the GC. So this is a scientific paper. It's all written in French, but I will link it in the description anyway. Last year, former Hedera founding member / technical lead Paul Madsen stated on Twitter that his favourite use case was not yet public and would result in a massive number of HTS and HCS transactions, so that's the token and consensus service transactions, and was critically good for the Earth. So again, what that talks about is that the fundamental use case is the opposite of Dovu. However, by internalizing some of those transactions on Hashgraph, fundamentally would benefit the system in general to help reduce carbon footprints. So it's all really sort of tying up here, and hopefully you guys are kind of seeing the dots join together here. If we flick over as well and we talk about this use case I just mentioned, which is microgrid management, Power Transition is a microgrid management platform to transform how energy is not only used, managed, but also traded by governments, businesses and individuals. So the overview being that Power Transition provides a peer-to-peer energy marketplace and management platform for consumer and business microgrids. The Power Transition team wants to enable a fair, direct and peer-to-peer system that can unequivocally be trusted by all parties. Now, we all know how Hashgraph can do that with its completely scalable and secure immutable ledger technology. Hedera was the platform of choice for stability and high throughput of the cryptocurrency Hbar. So we can see here that decentralized governance, security and stability will be critical to the success of Power Transition's IMaaS platform. With Hedera, Power Transition users can have a direct peer-to-peer exchange of Hbars for their energy. They can effectively trade energy using Hbar. Its finality and performance lends well to not getting bogged down and will keep the energy flowing. Currently, the platform is being tested using homes and businesses in Corby, UK, before being globally accessible. So this is something that they want to continue rolling out. They talk about the microgrid market estimate being just under $20 billion by 2024. And then they also mention again the famed finality of Hbar in 3 to 5 seconds, which is crucially important if you need energy. If I switch on a light and I need energy immediately, I need finality quickly in order to get that energy to my house and it be ratified through the grid. Having a look at Power Transition's website as well, we can see here that they are continually looking to scale and is in a strong position to support the growing number of organizations looking to produce or source their own low carbon energy. Again, this is really important when we look at other use cases from businesses like Tesla, for example, with their solar power panels. There are lots of homes in the UK and across the globe that have implemented this technology, replaced their roofs with the solar tiles, so they are producing their own energy. Any of this surplus energy could then be traded on the secondary market using a use case such as Power Transition, all through the Hashgraph ecosystem. Really, really great stuff. Again, tying this all back up, we see that this article on the Cointelegraph of French utility giant is pursuing carbon neutrality as a Hedera node operator. And this again talks about why they decided to join Hedera as a GC member. So EDF joined the likes of IBM, Google, and Boeing as a node operator, with each having an equal vote in future direction of software. Each member can serve for a maximum term of 3 years, with the possibility of serving for 2 consecutive terms. We are on the brink of seeing a massive use case, I think, unfold in the coming months, not only with DeFi and the DEXs and stuff going live as staking comes around, but as soon as one of these big use cases in the energy sector drops, which I think is fundamentally important considering the current climate we're seeing with the geopolitical tensions between Russia and Ukraine, is taking a massive toll on the energy sector. And these types of use cases which streamline the energy sector and demand for gas and other natural resources will play a pivotal role in helping clean up the issues we're seeing currently. Anyway, guys, I really hope you enjoyed this video. Like I've said before, leave a like, drop a comment if you enjoyed or have something to say, and I'll catch you on the next one. Cheers.